Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi, a very good morning. You're watching Trading Hour on CNBC-TV18. I'm Ekta Batra. With me is Prashant Nair, and it's turning out to be a session where we are marked by volatility on an intraday basis again. So we've given up all of the gains that we saw initially right at the start and then incrementally as well. So for the Nifty, just about 11,050 or thereabout is where we're at. Mid-cap index and Bank Nifty, which were outperforming initially, have also just about given up that mild outperformance and flattened out at this point in time. A lot of stocks in focus, and yes, the financials continue to be top of mind. So Indiabulls Housing Finance, which is up around 6.8% at this point. Yes Bank, which is up around 3.4%. Divan Housing, which held another call today to assuage concerns, so that stock should come up for you. And a couple of others such as Eicher Motors on the back of their 2 new launches, which we'll be talking about. So that stock in focus as well. The Aadhaar verdict is something that we're tracking very closely. So keep your eye out on the screen. Hi, Prashant.
Ekta, hi. I mean, so nothing really going on today with about a 12-13 odd point cut. So that's where we are at. I mean, things seem to be calming down a little bit. Enough has been said and commented and opined and analyzed about this entire, NBFC dependence on mutual funds, debt mutual funds and funding, and how that market could shrink, how the cost of borrowing could rise, etc., etc. And there is nothing in that sense new to add. I think, what led to that big move yesterday effectively was news that a couple of NBFCs had been able to access the commercial paper market at reasonably okay rates. I mean, maybe a little higher than what they would have accessed towards the beginning of this month, but nothing extraordinary or, nothing very high. So that led to sharp spike up and, a big spike in a lot of these NBFC names in the market as well. And from that point, nothing really has changed. So, I mean, in terms of triggers, what else could be there? I think it's just a waiting game between bulls and bears. I mean, there'd be many who'd be itching to buy many of these big beaten down names. I mean, the fine NBFC names. But there is also a sense of wariness whether there is something else. Is there another shoe to drop in that sense with information that some have and others don't. So I think that may continue till one side gives up. In terms of other triggers, there is the Fed decision, which I think we should not take our eye out off. 25 basis point is what is being priced in, but commentary, etc., will be important. But that's only, something we'd be reacting to tomorrow morning. The Aadhaar verdict is coming through as well, and we'll keep getting you details. I mean, this is a complex matter. Constitutional validity of Aadhaar was challenged by many petitions. A 5-judge bench is going to deliver the judgment. There are 3 separate verdicts. No,
I think this is going to be the final verdict. It'll be, I think, the consensus verdict, which is coming out at this point in time.
But there were 3 verdicts that we know. There were 3 verdicts, and 2 other judges were siding with.
This is the majority judgment as per Ashmit. So I think this would be the, we can probably deduce what the final.
So yeah, I mean, all I'm saying is that it's not a. It's not a yes or a no. I mean, so it's complex. We will get you expert opinion on this as we kind of go along. Sudarshan Sukhani, Vesto Analytics is with us. Sudarshan, thanks very much. Morning. What's your sense? 12 points lower on the Nifty?
Well, my sense is that we are in for a short-term up move. That is resistance somewhere around 11,200, and it is possible that slowly and steadily we may rise towards that. This is a short-term view for today, tomorrow. So at the current levels, there is a buying opportunity in the Nifty. If the index holds and then closes strong, carry it forward. Otherwise, make it an intraday trade. That's the very simple one-day view on the index. The Nifty Bank is a little more volatile and may easily be avoided.
Okay. Sudarshan, morning. What are the stocks you'd be recommending?
Well, there's a mild bullish bias today, and we are going with that bias. So Dr. Reddy's from my favorite pharma space is a buying opportunity. Actually, today most pharma stocks are doing well, so you could really buy any one of them. I've just selected Dr. Reddy's as the most appropriate one. Then Reliance is a buy. Reliance is an outperformer. If you see the charts, the dip in Nifty and the correction in Reliance was sideways. A stock that corrects sideways is a very strong stock. It doesn't even come down. So Reliance is a buying opportunity for the day, and I have a short sell which is Z Entertainment. It's in a bear market of its own. It keeps on going down.
Okay, what are the levels that you'd be watching out on a Z? It's currently at 448.
Z is a short with a stop at 455 and a target of 400.
Okay.
440, I'm sorry, a target of 440.
Okay. Sudarshan, you mentioned a lot of the pharmaceutical stocks. You're looking at Dr. Reddy's today. But I wanted your thoughts in terms of a couple of these broader market mid-cap stocks from the pharmaceutical space. Say something like an Ipca Labs. How would you be approaching that one? It's underperforming. Low volumes also, but nonetheless.
Well, yeah, I'm sorry, I'm not tracking Ipca Labs, so I'm not able to answer that question. I'm so sorry.
Anything else from the mid-cap pharmaceutical space?
I didn't get your question.
Any other picks from the mid-cap pharmaceutical space?
Yeah, no. It's the large cap. Okay. Oro Pharma, Cipla, Dr. Reddy's, Sun Pharma. These are the 4 ones that will do well. Mid-caps become sluggish when the market becomes sluggish. They react far more to the markets than the large caps do.
Okay, thanks very much. Appreciate you joining in and speaking with us with those trades as well. Let's get some futures and options sort of opinion. Yogesh Mehta, Vice President Equity Advisory at Motilal Oswal is joining in. Yogesh, thanks very much. Morning. Any way to trade the index? What's your sense?
Hi Prashant, morning. For the Nifty to trade, yes, it would be, it can be gauged easily. 11,080 is the resistance level right now, and it is quoting below that level. So till it crosses that level, it could be on a bearish mode till 10,980 level. So 10,980 and 11,080 are the crucial level where Nifty will trade for the day, and any breach beyond these levels can drag further 10,930 on the lower side, or the 11,120 and 170 at the respective level. So right now it is indecisive, or a short is favorable but with a minimal stop loss. On the stock specific, Prashant, we are recommending Bajaj Finance on the NBFC front. Currently it is quoting at, in October series, as a positional one. 2344, 2346 is the range it is quoting at. Keeping a stop loss of 2280, target could be in the range of 2470 to 2480 level. And another one is pharmaceutical space, Biocon. Yesterday it has moved a fabulous move from 660 level to 695, and today it is around 710 level for future segment in next series. Keeping a stop loss of 694, target could be in the range of 750 to 755. We are identifying one short position where Havells has negated its pattern, and today it is 630 odd in future segment October. Keeping a stop loss of 642, minor stop loss, target could be in the range of 610 to 612 levels.
16 or 17 points off on the Nifty. 11,050 is where we're at. Manisha is with us with essentially what's happening as far as the commodity and currency space is concerned. Manisha, oil's seen a bit of a breather.
It has, and that's because of the strength in US dollar. Also, it is the US Fed meeting being awaited. And then, of course, there are US statements saying that they will ensure crude oil availability ahead of the Iran sanctions. So, and of course, the prices had run up too much. So some correction is what you are seeing. But we still are closing or trading very close to that $82 per barrel mark in the Asian markets right now, even with a 0.25% decline that you have seen come in for the US crude oil prices. And Brent, of course, seem to be inching further ground. 81.90 is back, so we are almost at 82 back yet again. Mriganka Jaipuriyar of Platts now joins us to talk more about that space. Mriganka, hi, good to have you. So much has been happening in sense of statements, numbers, events. How have you taken all of that in, and the crude oil prices on where they are? What's your sense on where we are moving from here?
So, yes, prices have, well, they've breached the $80 mark, and like you said, they're heading close to $82. I think there is a lot of supply concern and uncertainty around supply, which has led to the recent rise in prices. This is particularly related to Iran, because we've seen headlines about how the Koreans, the Japanese, the Indians have all reduced their purchases of Iranian crude. At Platts Analytics, we have ourselves raised our estimate for how much Iranian oil is expected to disappear from the markets come November, and we've raised it from 1.4 million barrels per day to 1.7 million barrels per day. So there is a lot of supply uncertainty, supply risks, which are pushing prices higher.
So
you've also got,
So Mriganka, let's keep it to numbers then, because what we understand is that 2 million barrels per day of an export is what we will see for the month of September from Iran. So if we are looking at yet another 1 million being knocked off, and with the US saying that they will ensure enough global supplies, where is that coming from?
Where are the supplies coming from? Well, we've got Saudi Arabia, Russia. They have boosted supplies, not to the extent that they had committed to do in June, but they have raised supplies by about 500 to 600,000 barrels per day. And Saudi Arabia has said that they've got, they've got spare capacity, which they could bring online depending on whether the market needs it or not. U.S. production is also rising, but at a slower rate, and that is expected to persist until at least the third quarter of next year. So you have, there is supply coming on stream, but I think the risks to supply and the fact that should Saudi Arabia start pumping more, the fact that spare capacity will become limited, and then you've got geopolitical tensions, you've got the Venezuelan supply crisis, so all of that is weighing in on prices right now. But at Platts Analytics, Platts Analytics has not raised its Brent forecast yet. For December, we are still maintaining a forecast of $79 per barrel. So we have not yet raised that forecast because we do see some supply availability in the market out there, which will keep a lid on prices.
So, while you haven't moved on the forecast, what is the best upside scenario that you see for crude oil prices? Do you at all see 85, 90 kind of levels in next 6 months or so?
For now, we are maintaining our forecast of about $80 topside. But like I said, the risks are there. The fact that spare capacity is running low, the fact that stocks are running low, the fact that the U.S. seems quite determined to remove Iranian supply from the market. So the risks are there for prices to push higher. But also on the demand side, you have risks to demand growth as well. I mean, you've got the weather has recently, Hurricane Florence and the typhoon in Southeast Asia has knocked off some demand already. Going into next year, the risks to global economic growth from the trade war between U.S. and China could knock demand off. So there are risks on the demand side. So, I mean, again, I think volatility is what the market is going to see going forward, depending on how demand and supply, pan out in the next few months.
All right, Mriganka, we'll let you go at that. So volatility is perhaps the best case scenario that you have for crude oil prices, and some more strength, even if it's 80, 82 is where we're trading, is supposed to or is expected to hold on to.
Markets now, because in fact the Nifty is just about precariously poised at around 11,000. It seems as though that sort of fear that we were seeing is back into the markets, not to that grave extent, but definitely we're off the day's high as we speak, and 11,000 is just about what we're playing with at this point in time. Mid-cap index down around 0.3%, and the Sensex down over 200 points at this point in time. Ashwini Gujral is with us to discuss the texture of the markets at this point. Ashwini, over to you. What are you recommending? And do you expect this sort of intraday volatility to only increase in the second half?
See, given the bounce that we saw yesterday in the afternoon, if the bears don't break yesterday's low, then my sense is that dip should be bought. And to buy this kind of a dip where we don't know where yesterday's low will hold on or not, what you need to do is probably put up a stop at 950, 970. Should be that stop, and I would right now buy into Nifty, Bank Nifty because the bears, while they have brought the market lower, have not really taken out more than half of yesterday's low to today's high. So that way, if there is going to be some sort of a pullback, I think that pullback is still yet to play out. So for the moment, get long on everything and put a stop. That's the only way to know. On the bank Nifty, maybe 11,150 thereabouts should be a decent stop, because the way markets have fallen, it'll take a while for some sort of confidence to come back. It will not come back in a day, or because we went up 400 points yesterday. So that way, I'm a buyer right now. Now let's see how that plays out, but we are due for a bounce, and maybe a more substantial bounce than what we've seen. So HDFC Bank is a buy with a stop of 1960, target of 2000. Bajaj Finance is a buy with a stop of 2300, target of 2420. And Jubilant Food is a buy with a stop of 1280, target of 1325.
Ashwini, thanks very much. So Ashwini's point is go long with stops, but he's expecting a bounce. We'll have it back soon again. But Ashwini, thanks for now. We'll take a very quick break here. We'll come back. 43 off on the Nifty, so already about 10 points off the day lows.
Well, let's get talking about the fundamentals of the market. Sanjay Sinha of Citrus Advisors is with us now. Sanjay, hi. Thanks very much for taking the time out. We're seeing some respite coming into a couple of these NBFCs. Indiabulls Housing Finance, for example, is up 6.5%. The One Housing held a call earlier clarifying in terms of the fundamentals of the business and businesses going on. Normally for them at this point, a lot of rumors which is really floating around. What's your sense? Do you think that you would be a buyer right now?
So, as far as the NBFCs are concerned, this was one sector within the financials which was most vulnerable in a background of rising interest rates. Also, over the last couple of months, I would say the last couple of years, most of the NBFCs have tilted heavily towards the market as a source for raising capital or the liability franchise, and therefore that vulnerability actually grew even more. The only thing that you needed at this point of time was a spark to this tender, and I think that happened because of the ILFS fiasco, as well as the one which we saw happen in the case of DHFL. So if you look at prospectively, there are a couple of concerns that have now come very much to the forefront as far as the NBFCs are concerned. One, if the ability to raise capital gets restricted in a risk-off environment, then so much more is the inability to grow. So growth is one aspect that is now a concern. Second is that with the rising interest rates, the margins of the NBFCs are also vulnerable. So therefore, I would say that for some time to come, I think we have probably seen the best behind us. There will be a period before we will see some more interest come into this sector, and I think that will be triggered only when the interest rates start coming down.
Sanjay, moving away now, wanted your thoughts on a stock such as Tata Motors, because that stock is one of the top losers today. BMW, in fact, has come out with a profit warning. They've said that, the trade wars is probably going to impact business. They're not going to make as much profit as they had anticipated earlier. Is it a red flag for a company such as Tata Motors?
So if the reference is to the outlook on the auto sector globally, because the dynamics that are at play there may be a little different from the dynamics as far as the Indian scene is concerned. In India, in the short term, there could be some dent in this growth of the auto numbers that we have been witnessing, and surprisingly, the growth in the auto numbers did not even get dented by demonetization or GST. Globally, yes, the tariff war does have an implication on the demand and the revenue realizations by the companies in many of the geographies. So here, any company which has a larger part of the revenue coming from the global shores, yes, they will be vulnerable. But as far as India is concerned, in the short term, maybe if there's a dent because of the rising interest rates causing some constriction in the demand, this, in my opinion, may not last too long. because the underlying aspiration which is driving the auto sale numbers in India, I think that is still very much intact.
Any thoughts on names like Motherson, etc.? Sanjay, morning. Prashant.
Yeah, hi Prashant. So I would, rather than get pulled into stock-specific discussions, I think the ancillaries as a segment. If you've seen, when the Nifty fell from the levels of 11,700 points to the current levels, one of the sectors which has, been relatively insulated in this mayhem are the ancillaries. They have not suffered so much. So I think the market probably has taken a call that the depreciating rupee is going to be positive for the auto ancillary sectors. Whether they will actually be able to do so, that I think the next couple of quarters alone will say. But I think in a depreciating rupee environment, the ancillaries have some optimism as far as market is concerned.
Your thoughts on all of the developments in terms of the changes of management which are taking place in the private banking space?
So, if the transition is smooth, it is always welcome. Whenever there is an abrupt or a forced change, not only does it cause disruption in business as usual, it also raises a lot of misgivings among the investors. So it has actually, if you see, that is something that plagued another private sector bank a couple of months back. We have another recurrence of this. I think these are avoidable processes or the avoidable ways in which to bring about changes. A smoother transition is surely a more desirable option.
Okay.